Dylan Lewis just viewed my LinkedIn profile but didn't connect with me. Should I be offended? All that and more on this tech edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Friday, February 26, 2015, and joining me to talk about why LinkedIn can't get any love from investors is Mr. Dylan Lewis. What's up, man?
I'm doing all right. We are friends on Facebook. I don't know if we're connected on LinkedIn.
Yeah.
Right?
And I just for everybody to know, I totally made up that opening line just to be funny.
Yeah.
I haven't seen him. It's kind of weird to me how whenever you log into LinkedIn, you can see who's been looking at you all the time.
It's very
unsettling.
creepy.
It's like, okay, the girl I dated 10 years ago looked at my LinkedIn profile. Like, what?
Yeah, it's kind of bizarre. But I guess that's like the nudge that you get to check back in.
Connect with them, man.
That's how you get back into the system.
Yeah.
Because you always get those emails like, people are looking at your profile.
Yeah, and then, of course, the workaround is in incognito mode.
I do that all the time.
Yeah.
If I'm trying to find a contact at like a distribution outlet or something like that, I'm just like, oh, I'll just go incognito.
Does LinkedIn know that the only real way to properly use their site for any reasonably intelligent person is incognito mode?
I guess unless you're going to request the person whose profile you're looking at.
Right.
But then if it's the wrong person, then it's awkward.
It's all awkward and weird, yeah.
It's all cyber awkwardness.
Yeah.
Yeah.
So they reported LinkedIn reported earnings a few weeks ago.
Early
Did not go well. Probably should review that before we really talk about why they can't get love and why, or maybe it's a buy now. We don't know. So how'd it go? How were the earnings?
Yeah, the theme for this week was beat up tech stocks. And originally we were going to talk about a couple companies. And then
you just fell down the rabbit hole of LinkedIn.
Started doing our homework. And I was like, you know what? We're just going to talk all about LinkedIn this show.
Beautiful.
So LinkedIn, they reported in early February, stock shed 40% of its value after they reported earnings. So
were you there? Well, yeah, you were there, and you saw like the look on Michael Douglas's face and stuff. He's one of our coworkers.
It's one of his largest holdings, I think.
Yeah, and we're really sorry, Michael. Anyway, but the earnings were good though. Like I was rereading the release before we came down here, and they're still growing like a lot. Mm-hmm. And
it's really awesome to see like these great backward-looking things, but the forward-looking results, not so awesome.
Not so good, yeah.
So the issue here was not the reported numbers, as we talked about. Quarterly revenue, $862 million, 34% increase over comparable prior year period. They beat forecasts of $845 million to $850 million. Adjusted EBITDA was $249 million, which was beyond management's guided range of $210 million. And just to look at some of the business segment growth, Talent Solutions, which is roughly 2/3 of their total revenue, grew 45% year over year to $535 million. Marketing Solutions and Premium Subscriptions grew at 20% and 19%. Yeah. And those are their three major business segments.
It's not surprising that Talent Solutions is 2/3 of their revenue, and that's what they do for basically professional recruiters and all that stuff. So
yeah, and just as a refresher for the listeners, Talent Solutions recruiting are generally like the recruiting and hiring tools. Marketing Solutions more of the content marketing, ads, things like that would show up in your feed. And Premium Subscriptions, their other segment, job seekers, recruiters. It's kind of a range of individual users to kind of like small scale recruiting and HR efforts.
So again, those were great results. The problem was guidance. Mm-hmm. Was it that low? Because they grew at like 30-35% in most of their segments.
Yeah. Management offered a revenue target between $3.6 and $3.65 billion for fiscal 2016. And basically at the midpoint of that target range, LinkedIn is pegging revenue growth at about 21% next year. And you look back at what they've done the past couple years. So 2013 had year-over-year growth of 57%, 2014, 45%, 2015, 35%, and now they're pegging to 21% for 2016. I think
this is a really nice graph you made, by the way. I wish our listeners could see this.
It was a nice little chart. Yeah. I was very proud of myself. And so you're seeing that decline happen. And so part of the frenzy here is slowing growth. And you've been seeing this march down over time, right? I mean, it's not crazy. Obviously, as denominators get larger, growth rates are going to slow.
Is it? We'll probably talk about this more in a bit. But is it like a growth saturation type of thing? Like, are they just as big as it's going to get, and that's it, or what?
Well, it's not really an issue of user growth. That's been fine. Right. I think it's more that there was kind of this expected floor at a certain level. Maybe it was somewhere in the low 30s for growth, and that, given that they are not consistently net income positive, people kind of thought that, all right, we're going to continue to see this growth, and that will fuel all of the stock price growth and all the valuation that's built into the stock at the moment.
Should we read these numbers off to listeners? Go ahead.
And so it's not a totally fair comparison because the businesses are a little bit different.
Right.
But
and it's addictive.
It's
we're going to compare them to Facebook anyway.
It's hard not to talk about Facebook when you talk
Right.
about LinkedIn, right? And so just for context on what kind of growth rates they've been experiencing, 2013, 54% year over year, 2014, 58%, 2015, 44%. 2016, they're estimating between 30 and 40%. So they are also seeing a decline. If you look at the last 3 years, it is not quite as steep, and there's still a lot more upside.
Right.
Obviously, the model is a lot different, and it's much more scalable because they're just serving up ads.
Right.
But that might also have added to some of the pessimism a little bit.
Right.
If you look at what is underlying these revised growth rates and why LinkedIn thinks they might be, just not growing as quickly as they have historically, they're saying that Talent Solutions business segment could decline from roughly 30% growth in 2015 to mid 20% growth. And this is largely related to macro factors. They cited weakness in Europe, the Middle East, Africa, as well as some of the Asia Pacific countries. And I think they're at roughly like 40% of their business outside of the U.S. And I think that's where a lot of their growth is coming from. Mm-hmm. And so, a lot of the economic slowdown that we're seeing in some of those major countries abroad is going to be problematic for them.
Got it. Cool. All right. Well, before we move on, I wanted to point our listeners to the newly redesigned focus.fool.com. There you'll discover a special offer to join the Motley Fool Stock Advisor newsletter for all industry-focused listeners. All loyal IF listeners have access to a special discount on Stock Advisor that works out to $129 for a full 2-year subscription. Just go to focus.fool.com to take advantage of this offer. Once again, that is focus.fool.com. So, Dylan, diving back into what 2016 looks like for LinkedIn, what's the outlook for the company now?
One of the really great questions that I saw during the conference call, Mark Mahaney from RBC Capital Markets had asked if this revised guidance reflected any changes in the competitive landscape, anything like that. And, because that's something that, is there a threat to this core business that you have? Is anyone coming in and stealing business? You talk about sometimes there's like Facebook at work, or there, are all these like little kind of people stealing market share. And, Jeff Weiner, CEO, totally dismissed that notion. So I think as a shareholder, you have to like that.
Right.
They are sticking to the narrative and the rhetoric of this being macro impact and really nothing more. And so obviously you're going to expect some declining growth rates as a company matures. Hopefully, as we see some stabilization in the next couple of years in some of these markets where they're expecting a lot of growth. And this is a story that we've seen with tons of earnings reports, with people experiencing issues in China or India or, some markets that they were expecting huge growth, and the economic downturn has halted that a little bit.
Some of my coffee.
I think I'm all right. But I like the fact that the core business is not at risk here.
Right. So did during the conference call, did he mention any other growth drivers or anything else they're doing to kind of 2016 may be a tough macro year or whatever, but beyond 2016, where else is he looking for growth?
I think that's one of the things that I am very optimistic about with this company. So they have this Sales Navigator business solution, which is basically a social selling tool. And the idea here is it's going to help with like lead recommendations for salespeople, contact management.
That could be huge.
It integrates well with Salesforce. So it's in part lead generation, and it's in part kind of knowledge management. And I think in the recent conference call, one of the analysts estimated that it was currently at like a $200 million run rate.
Did he say to the company, "We've estimated your run"?
Yeah,
that's what he said.
Yeah. So it was in the form of a question. This is roughly what we're saying.
Okay.
Can you kind of confirm that?
Can you say we're insane or not?
Yeah. And so CEO Jeff Weiner did not deny that. So I think that's roughly what you can expect. In the past, the company has said that they could scale that to a $1 billion business. So huge runway for growth there.
Wow.
They're obviously still integrating the Lynda acquisition into their offering. They're really just beginning to see a revenue contribution come through from that acquisition. And if you remember correctly, I think that was a $1.5 billion acquisition. I think they saw maybe $49 million in revenue contribution in the most recent quarter. So it's going to take a while.
Right.
But I think as time passes, you're going to see that
I wonder
more
what
and more
they're
accredited to
thinking
earnings.
With that, because I understand it. Like if I wanted to learn how to code or something, there's tutorial videos on lynda.com. So
yeah, the skill building integration there is obviously really great. Or they could do something with like certifications where you've taken these classes and you're like LinkedIn certified in this specific skill.
Oh
that
man,
that job seekers are.
I'm LinkedIn certified.
Yeah, One of the other really great business segments I'm excited about is their sponsored updates. And this is really no different than what you'd see in your Facebook feed if you were scrolling through and you saw an ad for Google or pants or something like that. And this segment grew at approximately 85%. And so ballparking, that's roughly $90 million. Which comes in at over half of the marketing solutions revenue. And this is for the first time they've been at that level. And so this is something they talked about in the conference call quite a bit. They're going to continue to feed that segment. They're going to build out some conversion tracking and targeting tracking to kind of help it be a little bit more valuable to the participating businesses. But that's obviously a business that scales very well. It's not ever going to be something that is on par with what Facebook is able to do in terms of ads or what Google does in terms of ads, just because the user base is so much smaller. And I think the cadence that people go back to the platform is not nearly as frequent.
Right.
But I think you have to I was scrolling through LinkedIn today just to get like a UI experience, and see exactly how these were being integrated. And it's exactly the same experience that you're used to with all the various social media outlets.
Right. All right. So before we sign off, are you freeing up some cash? Are you going shopping for some LinkedIn shares?
A lot of fools seem pretty bullish on it right now.
A lot of people in this building do like it. So yeah.
Yeah. A couple other things that I do like more on the core metrics business side. EBITDA as a percentage of revenue has been consistently trending up. They had a little downtick early in 2015.
What do you think? Sorry to interrupt. About their because they, Asad Sharma, one of our writers, had a really good analysis, and he noted that the company pretty much always says you need to not focus on GAAP results where they lost money and go to EBITDA results because we have so much stock-based compensation and all that stuff.
Yeah.
What do you think about that?
You got to pay the piper, right? I mean, that's always kind of a cop out, and that's something that we see all the time with tech companies.
Well,
and
actually, 15 years ago, there was an open debate. They were like, all these tech companies are using stock options to pay their employees, but they're not expensing them and everything. What's the deal here? And Buffett wrote a really good article about it, and he and Bill Gates, because Bill Gates started expensing stock options at Microsoft, which is probably a sign that all tech companies should have been doing it. But he basically said it's an expense, and if it's just because it's hard to calculate, doesn't make it not an expense, especially to shareholders. So,
exactly.
Anyway,
something to keep in mind, and I think perhaps down the road we should do a stock-based
philosophical debate about,
or just take a look at the landscape of tech companies, who's paying what in stock-based compensation.
Do you know how much Larry Ellison, the former CEO but now just chairman of Oracle, he gets like $200 million a year in stock options?
Must be nice.
And that's
start a company and then just get stock options,
and then you can buy one of the Hawaiian Islands.
Yeah.
Anyway,
so circling back to our accounting conversation,
that's my fault. I'm sorry.
No worries. So EBITDA as a percentage of revenue has generally been trending up. There was a little hiccup in I think early 2015. I believe that was related to the Lynda acquisition. So. But based on guidance, margins should continue to improve. I think they're pegging somewhere around like 100 basis point improvement this in 2016, which is obviously great.
Do you think that how scalable do you think LinkedIn is compared to a Facebook? 'Cause Facebook's just a website, and we're all addicted to it, and we stalk people on it, and then there's ads, and I mean he's talking about getting 3-4 billion humans on this by 2020 or 2035 or whatever. That's scalable.
Yeah, it's very scalable. I don't know what the job search environment is like abroad, and that's one of the things that's tougher for me to wrap my head around with their international expansion and
it's like
the growth opportunities there.
Americans use it a lot or whatever.
It's very common. Like if you go out to drinks or something like that, and you have like a mixed group of people, and you realize someone that you're chatting with happens to work, like say we work in editorial and someone else works at a distribution outlet, it'd be very common for us to reach out and say, hey, maybe something works out. I mean, I had a high school friend who works at one of these kind of like upstart brokerage account type places, reach out and say, I realize that you're in financial content. It would totally make sense for us to see if there are any partnerships that we can work out so you guys can be on our platform. So it totally makes sense, and it's part of the culture here in the U.S. I would think it would have to be the same abroad.
I would think, but you never know.
Yeah, and that's bolstered by what we've seen with user growth. It hasn't really slowed down. One of the other core metrics for the business that I really like, I think over the past 4 quarters, it's been consistently between like 19 and 21% year over year. So that's looked pretty good. All in all, so since the post-release sell-off, stock is up about 10%. So it dropped around 40 and has recovered
Right.
10% from where it dropped. So it is still, I think,
Way off.
It's down in like the 113, 114 region.
Well, and its market cap is like 15 billion, I think. And I just see these sales numbers, and I'm like, talking about 3.6 billion in sales next year. So it's not profitable, although debate. And it's still, I don't know, 4 or 5 times sales. So it's kind of like,
yeah, but it's at a 37% discount to where it was in early February.
Yeah.
And
so if you're bullish, now's the time.
yes, if you're bullish, now's the time. I also think when it happened, it felt like a market overreaction.
Right.
Because
that was brutal. Like, it was just,
it was crazy.
punish it. Like,
basically, I mean, they shaved about $13 billion off their market cap in
last year.
in a month.
Right.
And so my takeaways here are the core business seems to be doing fine. Management doesn't seem to be worried about competitive threats to what they're doing. There aren't major players coming in to steal their lunch. User growth is good. EBITDA is trending where you want it to be. And there seem to be a lot of really good growth avenues available to them. So if you like them, seems like a great time to add to a position. If you already have a position with them, they are on my watch list right now. I want to just wrap up and continue doing a little bit more homework, but I've had my eye on them for a little bit.
Cool. All right. Well, I'll go connect with you on LinkedIn right now. That is it for us, folks. If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that's industryfocus@fool.com. As always, people in this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Dylan Lewis, I'm Sean O'Reilly. Thanks for listening, and Fool on.